But let's put the spotlight on Adani Wilmar. It's incidentally the best performing IPO in 2022. Why did it stand out? Is the foray of Reliance Industries' FMCG plan going to hurt their business? Let's understand. We've got Angshu Mallick, who is the CEO and Managing Director at Adani Wilmar, here to discuss that and more. Good to have you on board. Now, given the fact that it's the best performing IPO of 2022, that's partly on account of the move from the company's transition from an oil company to an FMCG company. How do you see Adani Wilmar transitioning over the next 3 years, and what's the vision?
Adani Wilmar, in the last 20 years, we have understood one thing, that kitchen essentials does not comprise only edible oil. Every household requires a set of products such as rice, oil, flour, sugar, spices. These are their everyday requirement. And if you see this entire category, you will find that 90% or more than that is all sold loose and in bulk. Now, when you look at the country with young population of 28 years, educated and going ahead, do we all see this country consuming loose? Do we see people will buy from the open market that the way they are buying? I personally and the organization doesn't look at that, and we feel if China 50% of the market is with branded rice and flour, then why India will not be? And I'm sure India will also consume branded, packed, hygienic staples. Now, if this staples basket, if you see, it's very, very large, and it is not possible for one company to change the way of buying. So it is 2-3 at least good brands and good organizations are required to contribute, because Indian consumers seek value for money, number one. Number two, they need consistency in quality. And third, they need excellent supply chain management. If you can deliver these three, I'm telling you, any good company can be successful. We are only looking at these three things.
Now, we just want to understand, with Reliance talking about their foray into the foods and FMCG space, some of their products are expected to compete with yours. So what is your take, and how do you plan to strategize to take on this competition?
First, it is very welcome that good brands, good organizations will join this staples business and convert them from loose to pack. That is one. Two, after all, every competitor brings in more efficiency and smartness in every one of us. So obviously, as an organization, we are also re-looking at our supply chain, procurement, distribution, everything much more minutely. Now, that is helpful because good competition makes you also alert and much more efficient. And we always welcome. And there is a space for 3 or 4 good brands and good companies to come. So it's good, I would say. Good for the organization, good for the country also.
Okay, so healthy competition is a win-win for the entire industry as well as consumers. But Mr. Mallick, analysts estimate that your market share of oil business is around 20%, wheat is 5%, and rice is 9%. Where do you see this headed, let's say, by the end of FY24, especially in wake of the competition that we just discussed?
See, the market share, obviously, we are focused towards it. And I can tell you today, our 5% flour market share will surely go up. We are now growing at around 40% per annum, year on year, for the last 2 years. Next 2-3 years, I see a similar kind of growth rate. With that, our market share should double. Surely not single digit, it should be double digit. Number one. Number two, in edible oil, we are at 20%, little less than 20%, but the way we are planning and the way we are working on it, I'm sure we will cross this mark before FY24. And we should be better off than others in terms of the growth. Edible oil was not growing last year because of the COVID and high prices. But this year, starting last October, this October onward, the edible oil consumption has increased in India. Next year, we see around 5 to 6% average growth. So a company like us should at least clock a double-digit growth.
Okay, so at least a double-digit growth is what you're expecting at the company level. But let's talk about acquisitions and inorganic growth as well. Because if I remember it right, you had earmarked 500 crores for acquisitions. And of late, we have seen the entire FMCG sector being abuzz with a lot of consolidation. Especially the smaller unlisted companies is what everybody is looking to buy out. Is this something that you are likely to do as well?
See, acquisitions are required for faster growth. We had acquired Kohinoor brand, and let me tell you, after we have acquired, we have put in our distribution system, and from November, December, we are seeing increased traction in it. And Kohinoor is a very strong brand. That is one. Two, we are looking for stretched assets because there are a lot of stretched assets in the country where the owners want to move out. And we see a great opportunity. Instead of putting new capex, it is better to buy brownfield. Let me tell you, in Adani Wilmar, we have a history of buying lot of brownfield factories and then churning them up and making them the state-of-art plants as we see today. So we have that expertise, and I'm sure that will be a faster way to grow in India.
Now, you were expecting, festivities, wedding season, etc., to drive your growth and see better demand for edible oils in Q3. Directionally, what kind of volume growth have you seen? Has it been mid-teen or high single digits?
See, the packed oil business is surely showing around a 10% growth over the last Q3. So that is an indication that market has opened up. The prices are comfortable and consumers are happy to buy at these rates. Wedding season is on, and this year the number of days of wedding has much more. The first phase, November 15 to December 15, is just over. But the real one will start from January 15 to March 15. And then the rural marriage will start from April 15 to July 15. Now, normally the rural market has the marriage season in the summer because they have just harvested their crop and after that they have no work. So they have enough money in their hands. And we have seen urban marriages are in winter and rural marriages are in summer.
So what's the outlook on your margin trajectory here on?
See, edible oil prices are now fairly stable, has come off from their high. At these levels, we are personally very comfortable because the rates are good. Margins are back in action. Consumption is good. Supply chain is also fairly stable. So overall, if you see, the business is fairly stable and good.
Mr. Mallick, just before we let you go, how is Horeca shaping up now with travel and on-premise consumption, especially for the Kohinoor portfolio?
See, Kohinoor is famous for their traditional basmati rice, the aromatic basmati rice. And of the last 2-3 years, much work was not done by the erstwhile owners. We see a great opportunity, and this year we have jacked up our investments and media for Kohinoor basmati rice. And if you come to Gujarat, you will find that it's a visible brand because in Gujarat, this is the season when people buy and stock for the year. And that is what Kohinoor was very famous for. And Kohinoor was always number one. So this year, Kohinoor is back in action, and so far the sales are surely very good and continue to be good. Now, for Kohinoor, we don't have plans only at basmati. We are looking at how we can enlarge the brand and take it forward because as a strong brand, we can leverage it for other products.
Okay, Mr. Mallick, we let you go on that note. Thank you so much for joining us. So quite positive when it comes to the trajectory going forward. And let's see whether 2023 is another year of a solid growth when it comes to the stock prices as well or not.